Hi, I'm Jim Dew, and I'm a wealth expert. I've been involved in wealth planning for entrepreneurs for 28 years, so close to 3 decades. Today we're going to talk about how interest rates affect wealth management. Interest rates are high, but it looks like the Fed has ended or is near ending the rising interest rates that path that they've been on here for the last year and a half. But what do higher interest rates mean to wealth management and to wealth planning? The first thing I want you to realize is if you have a well thought out plan and strategy, it shouldn't impact your plan much because you don't want to rely on interest rates going up or down as a solution to build wealth over time. So if you're investing in real estate or stocks or any of these smart ways you can build wealth, I wouldn't get too caught up in what higher interest rates mean to you. However, there are some implications. So for example, when you have higher interest rates, that usually means higher inflation. In fact, the higher inflation came first and then the higher interest rates, and there are certain investments that do better. So commodities do better when you have high inflation, stocks and real estate do better when you have high inflation, and often when people are thinking about their wealth building, they get nervous and they want to hunker down and they want to be protected and they want to hold all their money in cash. But over long periods of time, cash is one of the worst investments you can have because it rarely outperforms inflation. So even right now, if you're making 4 or 5% on your cash, that might feel pretty good, but that's really not making you that much money over inflation. So don't let the trick of being conservative in cash because it feels good prevent you from investing in real estate, stocks, private equity, the ways that you're going to truly build wealth, or in your own business, which is one of the best ways you can create wealth. When it comes to interest rates, there's other things like bonds and preferreds that do better when you have higher rates, and there are other things that get hurt. So owning bonds when interest rates go up actually hurt the bond value, but once interest rates have gone up and start going down, as interest rates go down, bond values go up. So sometimes having that, if you're a conservative investor, could be something to think about. Are there any ways to take advantage of rising interest rates while mitigating risk? Well, the first thing is if you have fixed rate loans and you can use that money to buy appreciating assets, that's a great way to arbitrage because as rates keep going up, you're in that fixed interest rate, and yet by investing in appreciating assets, you can grow your assets while paying for that money at a very low interest rate. On the other hand, when interest rates are high, that might not be the time to borrow money. So if you can fund your business, fund your lifestyle, be an investor in things like real estate, stocks, and private equity without tapping into high interest rate loans, that's a great way to make money even while interest rates are high. Another thing to consider, don't let the high interest rates prevent you from buying appreciating assets. So let's say you think you're buying a home and you're gonna have a mortgage on the home. If you can get a really good price today because interest rates are high and people are afraid to buy, remember the price that you buy in, when you buy a home, for example, that price is forever until you sell the home. So you want to buy it right. So if you can get a great price today, even at a high interest rate, remember, eventually those interest rates are going to come down. And as long as you've looked at your cash flow and you can afford that property, when the rates come down, guess what? You can refinance, or if it's a variable rate loan, the rates are going to come down automatically. So if you can afford it with a higher interest rate, but you can buy it at a great price, that's a strategy where you get in, you know you can cash flow the higher interest rate, and then when interest rates come down in the future, you got in at a great price, and now the payment becomes very, very affordable. But the hard truth and the reality is that sometimes it's hard to take advantage of high interest rates. And you're better off focusing on building a great business, investing your money in smart, appreciating assets over time, than to get focused on some magic trick about how you're going to make money because of high interest rates. I get asked a lot, Jim, what are you doing differently in your own investment philosophy when it comes to interest rates? And really the first thing I'm doing is I'm looking for opportunities. So for example, real estate has held up pretty well, but real estate might start to show some dramatic price drops. And we've seen a little bit of prices dropping in real estate, not a tremendous amount, but we're seeing that people selling real estate are giving better terms. They're having fewer options as far as who they can sell to. So it might be a time to increase my investments in real estate. But overall, the truth is, I don't make a lot of changes when something like this happens, because trying to time the market or guess what's going to happen or trying to make a different investment philosophy can get me whipsawed if I'm wrong. So I try not to be too smart. I try to stick with my overall game plan, and I try to continually invest in smart things over time. One thing that's happened though is cash is earning a higher interest rate than it used to. So you want to be really careful, and I've done this, my wife and I have looked at this, is what are you getting paid on your cash? Because I see entrepreneurs and they forget about their cash in their business or their cash in their personal name that's earning at one of the big banks maybe close to zero. And cash should be paying 4 or 5% today. So look at other options. There's banks online, there's other regional banks you can go to. If that's your safety money, make sure it's FDIC guaranteed, but you can get FDIC guaranteed money paying 4 or 5%. So don't let it sit there at 1% or 2% when you could get double or triple the amount at a different institution. So shop the rates, make sure that you have FDIC insurance and you're getting better rates on your cash, but don't rely on cash as a long-term investment. When people get scared and nervous, often opportunities arise. The last couple of years as the stock market dropped, I saw a lot of people saying, I don't want to invest in stocks. Guess what? I leaned in because when prices are going down, that's when I like to buy more than when prices are going up. The key is buying all the time over time. So buying real estate, buying stocks, buying private equity, venture capital, investing in those areas over time in a smart way, consistently. That's the number one thing you can do in your investment philosophy. Don't get too caught up in the interest rates. However, look for deals, don't have too much cash, and on the cash you have, make sure you're maximizing the interest rate within that safety bucket. What should you be doing if you're thinking about investing for your retirement, but you're nervous because of all the market conditions that are going on right now? Here's the most important thing I can tell you. If you have a long time horizon, 10, 15, 20 years, getting started is more important than when you get in. Now, if you had your entire life savings, let's say you had $5 million, that was all the money you were ever gonna have in your life, and for some reason it's just sitting in a cash account. Would I dump all my $5 million into real estate and stocks and private equity? Would I put it all in today at one moment? Probably not. I'd probably put it in over time. But I would assume if you're saving for retirement, you're investing over a long period of time. You're not just putting one chunk of money in. So when you're investing over time, getting started is more important than when you get started. Because here's what I do know. In 10 years, real estate's gonna be higher, stocks are gonna be higher. Most things you're gonna invest in that are gonna be good long-term investments are gonna be higher 10 years from now. So instead of worried about like, what if I invest today and in 3 months the market's down? What if I invest today and in a year my real estate is down? You're better off investing over time consistently than worried about that moment of time of entry. Again, if you have all your life savings you're putting in today, that's a different story, but you're probably investing today and over time. Do not sit in cash for a long-term investment because cash is always a terrible long-term investment. Cash is great if you're saving for something. Cash is great for emergencies. Cash is great when you know exactly what you're going to use it for. But often people sit on cash because they don't know what they're doing. And they go, I'm just going to wait till things are calmer. I'm going to wait till the war in the Ukraine is over. I'm going to wait till China is easier to deal with. I'm going to wait till the economic environment is better. Waiting for that stuff to happen, you're going to be waiting forever because there's never going to be a time where the world's at peace. There's never going to be a time where there's no economic concerns. There's never going to be a time when it's smooth sailing. And when it is, guess what? You don't know what's happening next. So there could be something terrible that's going to happen in the future. So get invested consistently over time in things that appreciate and make sure you know why you have your cash and maximize the interest you're getting on that cash. Interest rates are high, some of the highest interest rates we've seen in years. And you need to know, as an entrepreneur, as a business owner, as an investor, what to do. But remember, the most important thing you can do is have a strategy that works in good times and bad and stick to the strategy. I hope you enjoyed this video. I hope you got a lot of good information, and I hope you watch my next one.